Hey world, it's Ben want to come back with another video. I'm going to do this video here because I wanted to address what negative interest rates were. I had a family member ask me if I could address this particular subject. And I want to kind of go into it and give you in a layman's terms of how negative interest rates, which overseas in Europe right now is devastating their economy. Because remember, if it's negative interest rates, that means that the banks are actually loaning money out from a negative interest standpoint. Remember, banks are in the business of loaning money out and getting paid through interest. Where if the interests are in the negative or the interests are very, very low, then they really not getting paid by loaning all this money out to people. So guess what happens? They would be more reluctant, or more hesitant to loan money out. Now, who benefits from low interest rates and negative interest rates? The billionaires and millionaires. Remember, anytime a bank is deciding on whether or not they're going to give you a loan, they base it on your debt to income ratio. And so if you have way more income than debt, then you're going to get a loan. And so these loans are actually such low interest that the rich people, they're getting over. So they can get these big loans amounts for low interest, while the people who have a high debt to income ratios, they don't get the loans. You dig? So, and then also too, when you talk about savings accounts are affected by low interest rates. Okay? Savings accounts are affected by low interest rates. So if banks are giving you, 0.1%, and then the Federal Reserve lower interest rates, right? Then they're gonna particularly have to lower their interest rates so they can make the same amount of money they made. So now that 0.1% gonna probably be 0.08% or 0.06%. You dig? So who get hurt by that? Those that trying to save money. And if you're trying to save money, how can you save money in a low or negative interest rate environment? And the Federal Reserve knows this. You're only able to save money when the interest rates are high. That way banks can offer you a higher interest for your depository monies. Okay? Right now, the economy is such a bad state, family, that right now I think the average is like 4% on mortgage loans, right? But there's been like a 17 or 18% decrease in those that are actually applying for mortgage loans. And it goes back to what I said about wages, right? Keeping up with inflation. It don't matter how many people are working. If you're only making a certain amount of money and a lot of that money have to go on responsibilities, then you're not able to buy a new house or purchase cars or purchase other consumer goods that you normally purchase. And so that's going to decrease the GDP, which in turn is going to put us in a recession. Because see, even people that don't have the money and want loans, they can't get them. Because remember, we are in such a high debt environment right now. Consumer debt is at an all-time high. Corporate debt is at an all-time high. I think our debt for the United States is like $21 trillion. Come on, man. Okay? So pay yourself first, family. I just kind of want to give you a quick synopsis on what actually low interest rates mean. So when you hear about the Federal Reserve lowering interest rates, well, if you have a lot of money in savings, then you shouldn't be happy about that. You dig? Now you want to start allocating your money to different type of investments, because you're not going to get a good return on your money if inflation is 1.8% or 2% and banks are only giving you 0.1% or 0.05%. You're not getting no money off of that. All right? So make sure you like, share, and subscribe to videos, family. Remember, this being really the truth. Now, I'm only coming with information, food for thought that's going to grow your perspective net worth. And in the meantime, between time, may the Most High Saudi bring you joy. And being one is out of 5,000.